Thanks for tuning in to this week's news recap. Michael Saylor and Microstrategy get sued for tax fraud. Michael Saylor and Microstrategy are being sued for tax fraud in Washington, D.C. Carl A. Racine, Attorney General for the District of Columbia, tweeted that Taylor is a billionaire tech executive who has lived in the district for more than a decade, but has never paid any D.C. income taxes. In addition, Racine's office claims that Microstrategy aided Saylor in his intent to evade taxes on his earnings. Saylor allegedly declared that he lived in Florida or Virginia, where state taxes are lower, instead of Washington, D.C., where, according to the complaint filed last week, he lived in a luxury penthouse and docked multiple yachts on the district's Potomac waterfront from 2005 to present. Both Saylor and MicroStrategy deny the accusations. I respectfully disagree with the position of the District of Columbia and look forward to a fair resolution in the courts, said the former CEO of the company. The District of Columbia's claims against the company are false, added MicroStrategy in a statement. Racine estimates that the back taxes and penalties for both Saylor and MicroStrategy could total up to $100 million. Could this lawsuit put pressure on MicroStrategy to sell Bitcoin? This will likely just add to the pressure for them to capture cash on their Bitcoin position, especially if they have a large tax back bill, said Adam Cochran. After the news broke, the shares of MicroStrategy tumbled 4%. Cloud service provider enforces ban on crypto mining or staking. After the Office of Foreign Assets Control sanctioned Tornado Cash, cloud service provider Hertzner, which hosts more than 10% of Ethereum nodes, said that running any miners, including Ethereum miners or proof-of-stake validators, on its cloud infrastructure is a violation of their terms of service. The prohibition could mean that Ethereum would rely more heavily on cloud service providers like Amazon, making it more centralized and more prone to censorship. As the Ethereum community continued to discuss sanctions-related censorship on Ethereum, Martin Koppelman proposed a shutterized beacon chain, which essentially aims to encrypt key transaction details so they cannot be censored by validators. Both validators and relays wouldn't know whether to censor a transaction, as they wouldn't be able to see its sender or its recipient. Martin was on this Tuesday show with lawyer Drew Hinkes discussing what the sanctions mean for Ethereum as it moves to proof of stake, so make sure to listen. Arrested Tornado Cash developers' links to Russian espionage are denied. Alexei Pertsev, the web developer arrested in the Netherlands, possibly due to his work on Tornado Cash, was accused of espionage for reportedly having worked at a company linked to the Russian Secret Service. Xenia Malik, Pertsev's wife, denied the accusations. Alexei has never been associated with the FSB of the Russian Federation and similar organizations, she told CoinDesk. We moved to the Netherlands in the hope of a quiet, stable, and free life, which is unimaginable in military Russia. Pertsev is still under arrest, and there's still no clarity on the charges for which he was brought in. Is DAI going to abandon its USD peg? Rune Christensen, the co-founder of MakerDAO, proposed a free-floating model for the protocol's stablecoin DAI. Maker lets users mint DAI after depositing assets as collateral and is considered one of the OG DeFi applications. At the moment, there's almost $7 billion worth of DAI in circulation. Concerned about the sanctions on Tornado Cash and all of its ramifications, like Circle freezing USDC and DeFi front ends censoring transactions, Christensen wants Maker to reduce its real-world assets exposure, which would require DAI to free float away from the US dollar. Tornado Cash had extremely little exposure to RWA, or real-world assets, and is highly decentralized, but that didn't stop it from being sanctioned, he said. Christensen's justification to DPEG is this. As all other currencies pour fuel on the fire of the global financial Ponzi scheme that is already deeply in overshoot, we can prepare for the worst and focus on accumulating resilient collateral, such as ETH, or even eventually physically resilient RWA, and build something that could end up meaning the difference between life and death for millions. The proposal sparked a ton of reactions within Maker. If you're looking for a great recap of the various camps within Maker and their positions, Greg DePrisco, the former head of business development at MakerDAO and the founder of RWA Co., wrote up a great tweet thread explaining the philosophies of these three groups, which he dubs the futurists, the centralists, and the decentralists. By the way, if you're interested in the written version of the weekly news recap, sign up for my bulletin newsletter at laurashin.bulletin.com, where you can get the links to everything mentioned in the recap. Speaking of stablecoins, Tether, the issuer of the largest stablecoin USDT, denied a Wall Street Journal report that claimed the issuer might have problems with its balance sheet. The company also said that it will provide monthly attestations starting in January in spite of criticism over the lack of a formal audit. AVAX stumbles upon wild accusations. CryptoLeaks, an outlet that claims to reveal wrongdoings in crypto, posted a document accusing AVAX, Disclosure, a sponsor of Unchained, of using law firm Roche Friedman to initiate lawsuits against competitors like Solana for a strategic advantage. The accusations were categorically denied by Emin Gun-Sirer, the CEO and founder of AVAX, which is the entity behind Avalanche, a Layer 1 blockchain. AVAX believes in transparency and facing the world head-on, not through behind-the-scenes dealing or activity, said Sirer in a statement. The document has not been corroborated to date. In addition, it appears that CryptoLeaks is tied to a company called ICP, which is going through a fraud lawsuit brought by Roche Friedman. All three CryptoLeaks investigations can be linked to attacks on ICP, which calls into question the legitimacy of the accusations. On Wednesday, Kyle Roche, founding partner of Roche Friedman, withdrew as counsel from several class action lawsuits against crypto-related businesses, including Tether, Bitfinex, Tron, and Binance. AVAX, the native token of the Avalanche network, fell 11% following the news, hitting a low of $17.56. However, it later recuperated almost all of its losses and is now trading at $19.30. Welcome to crypto, FBI. On Tuesday, the FBI warned users about investing in DeFi platforms. Cyber criminals are increasingly exploiting vulnerabilities in decentralized finance, or DeFi platforms, to steal cryptocurrency, causing investors to lose money, the agency wrote. The public service announcement comes after the U.S. Treasury sanctions on Tornado Cash, citing a report from the blockchain analytics company Chainalysis, which described the $1.3 billion stolen in crypto during the first 3 months of this year. The FBI asks people to research DeFi protocols before using them. It also recommends that DeFi platforms introduce better practices. In related news, Representative Raja Krishnamurthy sent a series of letters to regulatory agencies and some crypto exchanges. He requested information on how they are preventing crypto fraud and what actions they are taking to protect customers. I am concerned about the growth of fraud and consumer abuse linked to cryptocurrencies, he wrote. In addition, Reuters reported that U.S. authorities have asked Binance to provide documentation on its anti-money laundering practices, and also requested that the exchange provide communications between CEO Changpeng Zhao and 12 other executives. Speaking of regulation, this week, the Financial Accounting Standards Board, or FASB, which will be addressing how companies should handle accounting for crypto held on their balance sheets, has decided not to include NFTs in its cryptocurrency accounting project. Final bit of regulatory news. This week, asset manager Grayscale said that crypto tokens Stellar Lumens, Zcash, and Horizon may be securities after receiving queries from the SEC. Three Arrows Capital founder Su Zhu claims Liquidator lied. Su Zhu, the co-founder of bankrupt crypto fund Three Arrows Capital, claimed that Teneo, the company in charge of liquidating 3AC's assets, misled the High Court of Singapore. The claim comes days after the High Court of Singapore gave approval to Teneo to probe the local assets of the hedge fund, which means that Teneo would be able to request any financial information and dig deeper into the matter. According to Bloomberg, Zhu said the liquidator had not provided an entirely complete or accurate version of events to the court. Also, for those interested in his whereabouts, which had been unknown, he delivered his affidavit in person in Thailand on August 19th. Speaking of troubled crypto lenders, Celsius, which has been in bankruptcy proceedings since July, filed to reopen withdrawals for certain customers in the custody program and withhold accounts. These accounts have deposits worth over $210 million from more than 58,000 users. The filing will be discussed by the bankruptcy court in a hearing next month. Also, Singapore-based lender Hodlnaut was granted creditor protection to organize its restructure on Tuesday. And Voyager, the bankrupt crypto lender, extended the deadline for its bidding and restructuring processes. El Salvador's Bitcoin bond delayed again to later this year. Bitfinex and Tether CTO Paulo Arduino told Fortune that El Salvador's Bitcoin bond was delayed once again until later this year. Bitfinex was set to be the sole exchange provider. El Salvador was the first country to adopt BTC as legal tender about a year ago. The government also announced a Bitcoin bond, which would be used to build a Bitcoin city. The release of the bond, also known as the Volcano token, was originally slated to happen in March of this year. Time for fun bits. Crypto.com's expensive mistake. In May 2021, a woman from Melbourne asked for a refund of $100 Australian from crypto exchange Crypto.com, which, disclosure, is a sponsor of my shows. She got the surprise of her life when she received more than 10 million Australian dollars in her bank account. It looks like someone mistakenly sent her more than 100,000 times her refund. The exchange didn't even realize the error until a Christmas time audit. By then, the money was gone. The woman had accepted the gift, bought a luxury mansion, and sent $500,000 to her daughter. Crypto.com has now initiated legal action against this woman, asking for the funds to be returned. If this had happened with crypto, the $10 million would have been lost forever. Thanks so much for joining us today. To learn more about A16Z's new NFT licenses, check out the show notes for this episode. Get exclusive access to more of my content through Bulletin. Subscribe for interviews you won't find on the Unchained podcast. Visit laurashin.bulletin.com/subscribe. Unchained is produced by me, Laura Shin, with help from Anthony Yoon, Matt Pilchard, Juan Ivanovich, Pam Majumdar, Shashank, and CLK Transcription. Thanks for listening.